Good morning, everybody. It's Mark Wiley with the Mark Wiley Group at Keller Williams Realty Southwest. Today is Wednesday, April 29th, 2020, and I am pleased to bring you another Mortgage Minute brought to you by our mortgage partner, Chris Binney. Chris, thanks for joining us today. I appreciate your time. And I know today we were going to talk a little bit about loan types, so primarily about the topic of jumbo loans. I know a lot of people are asking about that right now. So let's jump right into it and tell me a little bit about jumbo loan in general. What is it? What's the loan program and why do people use it?
Well, typically everybody looks at jumbo loans to be anything over the county limit, which is 510, 400. So if you're getting a conventional loan, a VA loan above that amount, they consider it a jumbo. With all the stuff going on in the marketplace today, right now, it's really kind of hard to find jumbo loans right now because they really don't want to buy them. So you're kind of going to bigger firms and stuff like that to get them. Rates typically are a little bit higher, but you know, as we discussed, one of the really cool partnerships that I have, we're still able to do jumbo loans up to like $2 million. And the rates are somewhere between 3.5 and 3.75 on a 30-year fix. So even better than some of the regular conforming rates out there.
Okay. And so what's the advantage of using a jumbo loan? Is it purely because of the loan amount you need?
Yeah, there's no strategic advantage of doing a jumbo loan product that's inside of 510, to be honest with you.
Okay. And
reserve requirements on jumbo loans are typically a little bit taller, but people that are buying $1.5 million house, usually money's not the issue.
Yeah, that brings up a good point. I think probably the most common question I receive on that is, you know, do we have to put 20% down, 30% down? Can I do 5% down? What do you see as far as the flexibility on that? Is it pretty cut and dry, 20% and higher for down payment?
No, not really. I mean, we can do a 10% down loan up to $650,000. So somebody can roughly be buying, you know, a $730,000 house in that ballpark and be doing 10% down.
Okay.
And you don't have mortgage insurance with that either, which is a big plus. So, you know, the rate's a little bit taller, but you're probably in the ballpark of like a 4%, 10% down, no mortgage insurance. You do the math on the payment. It's lower than if you were to break the payment up and do 2 loans, you know, that kind of stuff.
Okay. And is that the option? I mean, really, if somebody wants a jumbo loan, let's say they're able to put their 20% down, what's the advantage of doing a jumbo loan versus saying having a second mortgage at a higher rate?
Yeah, I mean, in my opinion, one, you're only going to have 1 loan instead of 2. Number 2, if you do a first and then a second, your second terms are going to be different. Either A, if you want something fixed, it's typically going to be anywhere from 6.5 to 9%, depending on your credit score. If you decide to do a second where it's a home equity line of credit, sure, you're going to be happy with the rate today because the rates are low, right? A 3, 3.25, 3.5 rate, but that's not going to last forever. You're going to have to recapture their money here, and you know, the Fed's going to move up rates next year probably. That we'll probably see a pretty rapid movement there. So, you know, so your HELOC rates, you're going to start seeing 4s and 5s and 6s and stuff like that within the first probably 3 years is my guess.
Okay. And so how does that compare to, let's say, an adjustable rate mortgage? I know we probably haven't heard too many people talking about that recently, but last year a lot of people were asking purely to see how low they can get their rate. What's the benefit to that program, and is it even available right now?
It's not really available right now, to be honest with you. Last year, sure. For people that maybe are only looking at living there for, you know, 3 to 5 years kind of thing, an adjustable rate mortgage, now mind you, does have a fixed period. You can do a 5-year fixed where it then turns into an adjustable, a 7-year, or even a 10-year. But a lot of people come in from the olden days when rates were higher. The 10-year fixed, or what we call a 10-year ARM, was a really good rate because you got a 10-year fixed and then adjust after that. But right now, honestly, there's not any ARMs available out there.
Right.
Maybe the companies that do have them, I can't think of anybody that actually does. But the companies that may have them out there, the rates are going to be elevated right now.
Right, right. Okay, great. So let's talk a little bit about the qualifications for somebody looking to do a jumbo loan. What kind of credit scores? Tell me the factors you guys are looking at.
I hope that all the jumbo loans that we do have a 680 credit score. Is that always mandatory? No. But with the credit score comes the loan to value. So if you have a 680 and up credit score, we can do those 80s and 90%, right? If you have something less than a 680, let's say somebody comes in with a 640, well, then the most we're going to be able to do is like 75% loan to value, which means they have to come to the table with, with 25% down. So can you do them? Yes. Just like any other loan, are you going to take some risk factor hits? Yes.
Right. Okay. And are there any other factors that you look at as far as qualifying for jumbo?
Really, credit score and reserves do come into play. There is sometimes a better rate on certain programs if you have more reserves than less. Typically, on average, a jumbo loan, after everything's said and done, down payment, closing costs, they do look to have about 6 months reserves of the payment. If you have less than that, they might start, depending on your overall credit and money profile, they might start talking about a bump to your interest rate for a risk.
Okay. So let's talk about VA buyers. We're in a military town, and obviously last year we saw that the VA limits were removed, giving VA buyers the ability to purchase at a higher dollar value. Let's talk about that real quick. Give me your snapshot of, are you doing higher limit VA loans now? Is there any special criteria? Can they still do 0% down?
They can. Actually, we can go to $1.5 million on a VA with no money down.
Okay.
Now the qualifications do get a little stronger as you go above the county limit. So they still consider over 510, 400 on a VA, a jumbo VA, and they are going to add some additional line items there. So like things like reserves, the rate's going to be just a tad bit higher than if it was a loan under 510. But that makes sense. I mean, if you have no skin in the game, right, and you're buying $1 million house on a VA with no money down, they're going to make sure their loan's a little more secure than somebody buying a $300,000 house.
Right. Okay, great. Let's see, what else is going on in the mortgage world? Before we wrap this up, is there anything else you wanted to share with our audience today?
Ask questions. That's really it. Don't stop asking, because today's news is not next week's news. From what I hear, starting in May, they're going to start relaxing some of their stuff. Things in states are going to start reopening. And I do think that's going to help banks and lenders get a little bit more competitive with their interest rates. We might start seeing a slow drop off on rates, which would be kind of nice. I mean, it'd be good to get your, 2.8s, 3%, VA FHAs, get conventionals down into the low threes. Because right now, I mean, they're in the mid threes, still great rates, but keep asking those questions both for the purchases and especially for the refis, because people with a 4% rate or 4.25% rate today may not make sense to refi, but next week that may be different. Right.
Well, that's great. I have one more thing I wanted to run by you, because this came out yesterday that Fannie and Freddie have decided to verify that the forbearance programs are not going to be a lump sum due payment. Can you touch on that real quick, and how do you feel that's going to impact everything?
Well, that's going to be tough, because Fannie, Freddie, FHA is another one. I haven't heard anything from VA, but they do want these to be spread out over time. And basically, originally people thought, well, I'll defer the payment to the very end of the loan, right? Well, that doesn't mean that you have 3 extra payments. That just means those 3 payments are a lump sum payment at the end.
Right, which for most people would be paid off when they sell the home.
Right. So what Fannie Freddie is really looking to do and put some pressure on is taking those 3 payments and dividing them by 12. And I did hear maybe even a 24-month stretch, which would be nice. Taking a $1,200 payment, times 3, pushing that over 12 or 24 months. So your mortgage payment plus $300 or plus 150 over the course of the next year or two. I think that would be super smart because then they get to recover much faster. That's
right.
That's really what all this is about. How can we recover as a nation, right? Not just the mortgage industry, but as a nation. And if you recover that slowly over the next 12 or 24 months, it's going to be way better than never recovering it until you sell or 30-year term.
Or vice versa, putting that pressure on a homeowner, you know, in 3 months from now. It's not like anybody's going to get their stimulus checks and then all of a sudden be fine in 3 months to pay those 3 months off. So I think that was definitely the biggest thing we were watching from the real estate side, was to determine, you know, what is the foreclosure short sale rate going to look like in the fall if they did force people's hand to pay those back quickly. So yeah, that was a positive note for us, takeaway, and we'll watch how that continues to unfold. Listen, I appreciate your time today, and that was some great information about jumbo loans. Again, if anybody has any questions, I will I'll put our information up here on the screen. You know, Chris, owner of Empire Mortgage, is my official mortgage partner here in our office at Keller Williams. And if you guys have questions, you want to talk to Chris or myself, here's our contact info. Please feel free to reach out via text, call, or email. And we're here to help, guys, anything we can do. So again, thanks again, Chris, for watching or for helping and participating in this interview. And we will see you guys next week.
Thanks for having me, Mark.
Okay, take care.